So good afternoon, everyone. I'm glad to have you here. I hope you're excited to be here in this first of many training in Introduction to Global Financial Markets. So we're going to try and break down exactly what the financial market is, what the Forex market is essentially. We'll try and answer some questions and try and clarify some points. So this class will lay up onto the next one, and the next one, and the next one after that. So we want to make sure that you participate as fully as possible. If you have questions, type in your questions, and I'll come back to the questions to answer them when it's time to answer that section. So first off, let's jump into our slide. First off, this disclaimer, you need to understand that when it comes to trading in the financial market, it does involve risk. That is why you're actually learning. So you want to have enough proper education so that you can make your decisions yourself, as this is for education purpose, and so you can be able to participate in the Forex market based on your own knowledge, right? Okay, so my name is Alexander. I'm going to be your host for this training. I'm a senior market analyst. I'm a professional trader myself. I've been trading for close to 7 years now, and I've been doing trainings, online trainings, and in person to thousands of people. I've actually worked with a couple of brokerage firms, and as a trader, I'm a technical analyst. I'm a technical trader. Smart money trading concepts. Okay, so here's what we'll be covering today, the core content of our discussion. We'll start off by looking at the financial market. What exactly is the financial market? How does it work? Who are involved, right? Who are the players in the markets? What do they do? And then we'll jump into why trade Forex. What are the advantages of trading the Forex markets? And why not do something else? Why not cryptos? Why not stocks? Why Forex? There's nothing saying you can't do all, but what are the distinct advantages of Forex, and how can you play to that? Now, we would also look into Anzo Capital. So who is Anzo Capital? What do we do? Why should you use Anzo Capital? And then we'll wrap up by looking at what are the ways we make money in the financial markets, right? So stay tuned, be attentive, keep the orderly, no noise, so that we can all enjoy the lecture and ask questions. I'll come back to answer your questions in due time. Okay, now let's proceed forward. Now, what exactly is the financial market? You heard the statement, the global financial market. What is the global financial market? Let's start off there. Now, you've heard of Forex, well, before I jump into Forex, well, the global financial markets, part of it includes the Forex market, right? Because Forex is actually an acronym that stands for foreign exchange, right? Now, if you think of a market, you think of people coming to a place buying and selling things. So there are buyers, there are sellers, there are vendors, and all of those things. Well, the Forex market is somewhat like that. The difference is, well, you're not going to a physical marketplace. The market itself is virtual in terms of it's online, but there are buyers and there are sellers just the same way there are buyers and sellers in a real market, right? So the Forex market, or the foreign exchange market, is a market where currencies are traded, so Forex itself. But the global financial market, of which Forex is part of it, is a much larger market, right? So we're talking of stocks, so things that you could trade Teslas, you could trade Google shares, you could trade stocks, you could trade commodities like wheat and cocoa. You're not buying and selling them, but you could trade their prices. You could trade the price of gold and silver, right? So, but then the Forex market is the currency market. So think about it. Currencies are never the same price. So the value of the Naira, for example, is different from the value of the dollar. It's also different from the value of the cedis or the yen or the pound, right? So there has to, if two things don't have the same value, then you cannot just swap them one for one. So you cannot just say, okay, I'm going to give you $1. Give me 1 Naira. After all, it's 1 1. No, they don't have the same strength. They don't have the same buying power. So foreign exchange or Forex trading is where it's a scenario where we are trading, we're trying to profit from the fluctuation of price, right? But exchanging one currency for another currency with the belief or with the hope that we'll be able to make a profit at the end of the day when we do the bottom line. Right? Now, the Forex market is actually the largest financial market in the world. every single day in the Forex market, we have this volume of about $6.6 trillion that is traded. So every day in the market, $6.6 trillion is, more than $6.6 trillion is traded. So you can see how huge the market is. So the reason that is, and that's one of the key advantages which we'll come and we'll talk about much later. But imagine a marketplace. Would you rather sell in a market or trade in a market where 1 million people pass through every day, or would you trade in a market where only 100 people pass every day? You will know that you have more chance of making more money in a market where you have more people. That means more money flowing in and out. Now, what are some of the things that are traded on the markets? Well, like I mentioned earlier, the global financial market, it encompasses all of this, as you can see on your screen right here. So we have the currencies, which you can see here, which is where we talk about the euro, the dollar, the pound, and the yen, all of those stuff. They are currencies, and we trade them. We can exchange them for another in a bid to make money. Now, if you've never really heard about Forex, it might sound a little bit confusing. How do you sell and buy currencies? How do you sell and buy money? What do you mean buy and sell currencies? Well, I'll show you how you probably already do that already, or how you already do that now, just to simplify it and bring it out like an example that you can relate to it. Now, other things that are traded in the market includes commodities like silvers, metals like silver and gold and copper and all of those things. You could trade their prices. You may not own gold, but you can profit from the price fluctuation in gold or silver, and this is only available when you're trading, doing online trading in the global financial market. Other things you can trade include CDFs like stocks, like oil, and things like indices, where you have the US 30, the Dow Jones, and all of those things. They are indices that you can trade. So, and then we have commodities like grain, soft, and all of those things. And finally, we have stocks, right? So you could buy and sell Amazon shares, not necessarily owning the share, but trading the exchange rate, the current value, and trying to make profits as to whether it goes up or comes down. And then there's one which is not here, which is kind of like the elephant in the room, which is cryptos. Now, cryptos has also joined into the global financial market in the sense that it's also tradable. You can trade it on the Forex market, and it also has a very huge depth, has lots of potential. We'll see how that goes in the future. Okay, now let's look at what exactly is trading and how, what are we trying to do, and what example can we use to simplify it, especially for those of us who don't understand the idea of buying and selling currencies. Now, the objective of Forex trading is to exchange one currency for another currency in the expectation that when price change, we'll be able to make a profit. Now, let's look at that again. As traders, our objective is to try to exchange one currency for another currency in the expectation that when price change, we will be able to profit from it. Now, look at this example. Let's assume you want to buy the dollar, right? So as you can see on your screen here, let's say who can tell me what's the current exchange rate for the naira to the dollar today? I'm sure it should be something like 560, 570 on the black market. CBS rate will still stay around 411, 416. Right. So now, imagine if you bought the dollar when the dollar was like 400 on the black market. Just imagine, for illustration purpose, imagine that you bought the dollar, right? So you went to the Bureau de Change, you went to any of those guys that sell dollar in the Bureau de Change or anything, and you decided, okay, I'm going to buy $1,000 or $10,000 or $500 or even $100. So you go there, right, and then you purchase $100, right? So you purchased, let's say you purchased $10,000, for instance, at the rate of $400 naira to a dollar. In order to buy $10,000, you would need, at this exchange rate, you would need 4 million naira. So in order to buy $10,000, you need to cough out 4 million naira to do that. Now, let's say you bought this, right? You bought the dollar, you bought your $10,000 that you wanted to buy at, you needed 4 million naira to buy it. Now, months later, a few weeks later, the price jumps up, Now, the price jumps up from 400 naira to $1 to, let's say, 450 or 500 naira to $1, right? What just happened? Well, the $10,000, remember, let's say you take the money and you take it to, you went to your house, keep it under your bed, you keep it in your drawer. It will still be sitting down there as $10,000. It will not suddenly multiply. However, the value of $1 against the naira has changed. So the $10,000 you bought that you needed 4 million naira to buy, which has now appreciated. So $1 instead of being 400 is now 500. So you say, okay, you go back to the bureau de change, you go back to the, to the bank, and you say, I want to sell the dollar. And they'll say, okay. They'll tell you the current exchange rate. And the exchange rate, let's say, is now 500. You give them the same $10,000. And how much do they give you now? Well, they'll give you 5 million naira. Now, what just happened? You just created 1 million naira from thin air. Do you understand? So what you just did now is you created 1 million naira from thin air because you were able to put money where there's value and gain on the appreciation. So this is what we say, the objective of Forex trading is to exchange one currency for another currency with the expectation that when price change, would be able to make profit on the end. So that's what this whole English is saying here, right? So I hope this is clear and I hope it makes sense. Now you now have a local example of what Forex is. Now this transaction here is actually Forex trading. The difference is it is not online trading, right? It is manual, physical Forex trading. Now, if you take the same process, make it simpler and take it online, you now have what we do as Forex trader. We still try to do the same thing. We still try to make profits by buying one currency against another currency and trying to make a gain. Now, look at this same example that we discussed here. Two currencies are involved, right? The dollar and the naira. Notice that when you bought $10,000, what did you have to sell? Well, you sold your naira, not so. In order to buy the dollar, you had to sell your naira. Now, you no longer have the naira. All you are left with is the dollar. Now, when you want to close the transaction, well, you go back and you sell the dollar. And what happened? You buy back the naira. So in each transaction, you are both selling and buying. So in this first transaction here, what you did is you sold the naira and bought the dollar. In the second transaction here, what you did is, well, you sold the dollar and bought back the naira. In the first one, we sold the naira, we bought the dollar. After the price has changed, we sold the dollar and now buy back the naira. And that's how we're able to make an appreciation of 1 million naira profits, right? I hope this is clear. Now, let's proceed. Now, I'm sure to a reasonable extent, you understand what Forex is or how currency trading works. How do we buy and sell currencies? Not the technical details of how it's done, but you understand the concept of how we're able to buy money and sell money. It's just we're exchanging them for another. Now, the question is, why Forex? Why Forex? In today's session, in today's training, we're not actually going to go into so much detail as to how do you trade Forex, what do explain all the application and some of those things. No, we're just going to try and break down what Forex is so that you have a very strong foundation going forward. Now, why trade Forex, right? Why should you trade Forex? But there are a lot of examples, there are a lot of reasons why you should trade Forex. Well, I'll start from here, right? The world is changing. It has changed and it will still, it's changing even much faster now than ever before. Well, you need auxiliary source of income. I don't care what you do. I don't care if you're a doctor. I don't care if you're a military person. I don't care if you're a pilot. Whatever it is you do, you need strong sources of income. You need multiple strong sources of income. Look at the country, for example, everything is on the rise. Inflation is skyrocketing and most likely going to increase going forward. However, the income, the problem is most people's income stays the same, while all the things they need the money for keeps appreciating. Well, if you have a job, good and fine, but you don't get increase in salary or in payment, every week or anytime there's inflation. It's okay. The cost for buying things has increased. That doesn't increase your salary, so you can buy the same things you used to buy. No, it stays the same. In some cases, it gets less. However, what you need the money for keeps increasing. So you need to find a way to tap into a market that you can earn auxiliary source of income, if not even full income, right? Now, when it comes to the Forex market, like we mentioned earlier, it is actually the largest financial market. As personally, 70-80% of my income or my main income comes from my trading, right? So yes, of course, I work, Anzo pays me, and they pay me quite well, but my main income comes from my trading. So you need to supplement your income. Now, why Forex? Why not something else? Well, you can obviously do something. You could start a business, you could, buy shares, you could even trade cryptos. And why you can do all of that, there's nothing really stopping you from doing every single thing. You could do a little of this, a little of this, a little of that. Trading on the Forex market has a lot of perks. Now, let's look at some of them. Now, the first one is actually flexibility. Now, the Forex market is a market that is open 24 hours a day, 5.5 days a week. Now, from Sunday night till Friday night, the market is open. So this flexibility is key in the sense that you don't have to quit your job to start trading. You don't have to quit what you're doing or stop what you're doing to trade. You can obviously trade within, and you don't need to spend all day doing something or learning, or you just need to master a few things or learn a few things peculiar to you, and you should be good to go. So the flexibility in the market is a very good advantage considering trading in the Forex market. Now, there are no trading restrictions, meaning you can enter a trade, now and close in the next 3 seconds, in the next 2 seconds, in the next 1 second if you're fast enough, and make profit and you're out of the markets. You could hold a trade, you could be just like the Naira against the dollar. Let's say you want to buy, you know how much time it takes you to get, and then how much time how long it will need to appreciate before you're able to go back and sell it to make profits. However, there are no restrictions on the Forex market. You could enter a trade immediately and close it as fast as you can. You could hold for weeks, for days, for months, for years, even if you wish. There are no restrictions in the market, and you could start with any account, with not crazy account size. Now, if you look at the example we talked about earlier, where we used the Naira against the dollar, in order to make a profit of 1 million Naira, we had to buy, we had to invest 4 million Naira, Now, not everybody has that kind of money. And, imagine if you had bought $500 or $100 and it appreciated from 400 to 500. Well, how much profit would you have made? $100 at 400 would be like 40,000, and then at 500 would be like 50,000. So you make 10,000, and it might take 2 months or 3 months for it to go from 400 to 500. However, in the Forex market, with an account size of just $100, you can start trading because you have provided with leverage. You can start trading in the Forex market, and you don't need price to move crazy amounts. Price just going from 1.0100 to 1.0200 is enough to make you $100 or $1,000 or even $10,000 because of leverage and because you have the ability to use multiple lot sizes. Don't worry, we will explain much of those concepts in a later video as we try to break down this course. Now, you could go long or short, meaning, you can provide long or short-term income. That's what Forex can, serve as an auxiliary source of income, or it could be your full-time income if you want to be a full-time trader like myself. Obviously, you don't have to jump in and be a full-time trader. You can start learning the trade, getting better and better, and then you could, graduate from that stand. But even as a short-term income or part-time income, it could provide you good solid income if you're trading quite well, or even leveraging the skill set of traders by doing what we call copy trading, which would also be explained in a later session. Okay, so another advantage of the Forex market is liquidity. Now, remember when we talked about the market being a $6.6 trillion daily market? Well, it's liquid. It makes the market really liquid. Now, what do we mean by liquidity? If you have a house in Banana Island, now the house itself might be worth 100 million, but it's not that liquid. What I mean is, if you want the 100 million now, you probably have to wait some weeks, or I doubt if you'll be able to liquidate the asset in a matter of days. I'm sure you can, but you know that there'll probably be challenges. Sometimes you might be waiting months to be able to liquidate your asset. However, in the Forex market, orders are instantly. You can instantly get in and out of the market. You can instantly buy and sell. There's no waiting period. There are always buyers in the market. There are always sellers. Whether you want to hold your trade for 1 minute or for 1 hour or for 1 day or for 1 year, there's nothing stopping you. It's all about your own trading style and your own preference. So the liquidity in the market is huge. You don't have to worry about, okay, so if you buy shares and you're trying to sell it, you might want to sell it at 200 naira per share. But before you find somebody to buy up all your volume, the price may have dropped down to, let's say, 180. Well, you have to sell at 180. And you just lost value because the market is not that liquid. But the Forex market is really, really liquid, and there are no penalties or waiting time to it. So far, so good. I hope we are following. I hope we are getting the concept bit by bit. And one other advantage of the Forex market is simplicity, right? If you think about it, if you want to learn a new skill, if you want to learn a new trade, even if it's, let's say you want to learn to make hair or make bead or make, something, or furnitures, you know how much time you need to, you would have to, now sure, in the Forex market, you still have to learn and all, but how much is it required in terms of what you need to start? Well, to start trading, all you need is a mobile phone or a laptop. You need an internet connection, you need capital, and you need a reliable broker. Now, you all have, I know we all have 1, 2, 3, 4, we might wink on 3, but you all have 1, 2, 3, and 4. You have a phone or a PC because that's the only way you're able to join into this program. You have internet connection because without it, you won't be hearing my voice. Now, how much capital is required? You don't need 4 million naira to start trading. With as low as $100, you can have a live trading account and start participating in the Forex market. And then, sure, you have Anzo Capital, which is one of the most reliable brokerage firms around. So they are key. These are one of the key advantages of trading. And finally, last but not least, the volume or the size. The volume in the market is huge. We've mentioned this multiple times, $6.6 trillion daily volume, meaning there's almost no limits to how much you can earn. I've made $100 in a day. I've made $1,000 a day. I've made $8,000 in a day trading before. I don't know any professional that could probably pay that, right? So this is because, well, the pool, we're looking at a $6.6 trillion trading volume, right? So it's huge. The depth in the market is crazy, and there's no limit really to what you can earn. Obviously, you don't want to go and be greedy because, well, it might get you bonds. But realistically, there's no limit to how much you could earn because it's almost a bottomless pit in terms of the depth of the market. Now, who are the participants in the markets, right? Who trade Forex? Well, it's shocking to know that a lot of the institutions they all participate in this market. And why won't they? We're talking about a market with a volume of $6.6 trillion daily. Now, one of the biggest players in the market are the large commercial banks. Now, when I say large commercial banks, I'm not referring to your local banks. These are what we call LPs, liquidity providers. So we have people like JP Morgan, Morgan Stanley, Goldman Sachs, Barclays Bank, Citibank, HSBC, the Bank of Canada, the Bank of England. These are big liquidity providers that provide the depth in terms of, that provide the rates, the volumes in the market. Now, these banks, they perform interbank transactions and are one of the key players in the market. Now, we talked about the volume of the market being about $6.6 trillion. Well, a huge chunk of that volume is processed by these few banks, right? Now, the next big players in the market are the central banks, including the central banks of Nigeria, right? So every single government or every single region have a governing bank. Now, these banks, if you think about it, what is the role of the central bank? Well, it is to set monetary policies. It is to ensure that their currency is is well positioned or doing well. At least that is what they try to do. So what they do in effect affect their currency, which turn in effect can have an implication on the value of their currency. So as traders, we tend to pay attention to, we pay attention to the activities and how we can get insights as to whether we should be trying to buy more of a particular asset or sell more of it based on the positioning of the central banks. Now, other institutions like what you have here as small banks and institutions, we're now talking of big corporations. So just because they write small banks and institutions doesn't mean they are small in any way. We're talking of big corporations like Tesla, like Microsoft, like Amazon, that have big global institutions that need to be able to access Forex. They need to be able to access the exchange, the global market in the sense that because they are, for example, you buy raw materials from China or from Turkey or from somewhere, they all need to be able to be participants in the market so that they can get good rates. Now, they don't all participate in the same level or in the same way, but they are also participants in the market. Now, when it comes to actual trading, this is where we now start going into hedge funds. Now, don't forget that small banks, like local banks, like the Zenith and the GT, they all have in some way participate in the market. Most banks have what we call the Treasury Department. And one of the key functions of that department is they have Forex trading department. And they participate in the market, trading in their own, trading the Forex market just like you and me. But they are small traders or small, as big as they are. For the market depth, they are small traders. Now, hedge funds, you probably have heard of hedge funds, big hedge funds. They are also key players in the market. Insurance companies, what do you think they do with the excess cash and pensions? Well, they participate in the global financial market, and then they give you something like 3% annually, and maybe they make something like 80% from your money, but then they give you 3%. So, these are big participants in the market. And then you have traders like you and me, which we call retail traders. We just try to participate on our own level, try to trade with even if you're trading with $1 million, you're still a retail trader in the market because you don't have, your volume doesn't really mean anything to it compared to a $6.6 trillion. But that doesn't really matter. You can make a lot of money. You could set out to try and making $10 a day or $5 a day or $20 a day or $100 a day on the average. What that would do for you if you manage to be consistent. Right? Now, the Forex market, as part of the things we discussed earlier in terms of advantage, is very attractive because, well, we mentioned that it's open 24 hours a day, it is highly liquid, it is the largest market in the world, and you have the ability to take leverage. That means with a little bit, with small capital, you should be able to participate much bigger in the market. And it will not be possible in any other place other than the Forex market. So what I mean, for example, is if you want to buy shares, right, you want to buy 100,000 units of a particular share. Well, if the value of the share is 10 naira per share, you need to actually bring out the entire value to buy the share. So if the value of the share is 10 naira per unit and you want to buy 1,000 shares, for example, well, you will need 10,000 naira. So if you wanted to buy 10,000 shares, well, you will need 100,000 naira. Now, in order to buy that, you need to cough out the entire 100,000. However, in the Forex market, because of leverage, if you want to participate or buy 1,000 shares, instead of putting up the entire 100 or 1,000 that is necessarily required, because you're provided leverage, you might only need to put up $10 or 10 naira or 100 naira to participate or to own a share or to buy shares in that same sense. Let me not call it to own value. What about 100,000? And this is all done because of the power of leverage. So the broker provides you leverage, And then with this, you're able to do more in the market. Now, we did mention about basic requirements for trading. I said you need a mobile device, be it a mobile phone or a laptop or a tablet. You need an internet connection. You need a broker, and this is where Anzo comes in. And sure enough, you need startup capital. So with as little as $100, you could have your account set up. You could have a trading account that you can start trading on. Now, one of the key advantages of having a funded account, remember if you joined in my earlier session today, is the fact that, well, you have the ability to get even more education, more knowledge with our private exclusive classes where you have the ability to trade with me more or less, and we'll look at trade analysis together. That will definitely enhance your learning and enhance your trading. So you definitely want to try to make sure you get on board on my classes. Now, broker, what is a broker? Why choose Anzo? Well, in order to participate in the Forex markets, you need a broker. So it's just like the same way, if you think about it, in order to, if you want to buy the dollar now, you start thinking of going to the bureau de change, if you're in Abuja, so you think of going to zone 5 or zone, zone 4, you're trying to go to where you'll be able to get it, because you can't just enter a supermarket and say, I want to buy a dollar, right? Now, in this particular example, like I mentioned, the people who give you the access to it, which is supposed to be the banks or the bureau de change, however the case may be, represents the broker. Now, in order to trade the Forex markets, you need a broker. There are several options to choose from. However, why should you choose Anzo? That's what we're going to consider. Now, there are a lot of reasons, right? We're going to just highlight some of the key ones. Now, first of all, Anzo Capital, we're a global brand. We have offices in over 9 countries globally, and we operate in over 100+ countries globally, right? Now, that is one. There are a lot of companies, most brokerage firms already have that. But Anzo Capital, we are a tier 1 regulated brokerage firm. So what that means is we have heavy regulations. Our mission statement is always value. It's always quality. As you can see here, we have offices in Singapore, Hong Kong, Australia, Cyprus, Nigeria, obviously. And we have multiple tier 1 regulations, such as the ASIC, right, which is the Australian Security and Investment Commission, the IFSC, which is the International Financial Service Commission, Belize. We also have the SVGFSA, which is St. Vincent and Grenadine Financial Security Authorities. Now, all of these things you can always go online and check, but it's very key because regulation is very, very important, because without proper regulation, you are at risk with the brokerage firm. Now, most brokerage firms will have some form of regulations, but you need proper regulations from brokerage firms, especially at tier 1 areas, because it is key for things like to ensure that your capitals or your funds are secure, in the sense that the broker does not deal with your capital. Your trading is passed directly to the market, and they're not using your funds to do any sort of business. So what you want is to be able to assess the market. The broker provides you the platform to assess the market, and you want to have confidence that the broker is giving you that straight access to the market. Now, Anzo Capital, we are one of our key value is the fact that we are a non-dealing desk broker, right? What we call NDD, non-dealing desk. Now, as a non-dealing desk brokerage firm, what this means is that all your trades are passed directly to the markets. There's no conflict of interest, right? You can obviously go and do a small research and see what exactly is the difference between a non-dealing desk broker and a dealing desk brokerage firm, right? Now, a dealing desk brokerage firm, which is most of the brokerage firms, the problem with that is, well, there can be conflict of interest because they are not passing your trade directly to the market. So what that means is your trades are being balanced or being settled in-house. So when you win, they pay you. When you lose, the money goes to the brokerage firm. And that is not the way it's supposed to be, because the brokerage firm is not the market. Remember when we were talking about participants in the market, we mentioned that the liquidity is provided majorly is by the big banks, the liquidity providers. Now, brokerage firms are supposed to pass your trades directly to the LPs, and then if you make profits, your profit comes from the LPs and not from the brokerage firm. So with a non-dealing desk system, you have a check mark where there is no potential conflict of interest, where you start seeing trade manipulations or stop hunting or stuff like that you might find on a dealing desk platform. So Anzo Capital, sorry, we're a non-dealing desk brokerage firm. You can obviously check this out. In Nigeria, we are actually the only fully non-dealing desk brokerage firm. Some brokerage firm operate a hybrid of / between dealing desk and non-dealing desk, what we call A book and B book. Anzo Capital, we're a fully non-dealing desk broker. And that's why you see we spend a lot of time trying to get you up to speed, trying to get you to trade, giving you all the necessary information to proceed and to be successful, because that is exactly the aim. Now, we are also just on the side, we have won several awards internationally in terms of execution, in terms of trading. We are the fastest execution platform. Our deposits and withdrawals are extremely fast. And obviously, we provide you with top-notch educational facilities. Now, Forex. The whole reason you're here is because you want to be able to learn how to earn. What are the ways to earn? Well, there are three distinct ways you can earn trading on the platform. The first one, which we have already discussed in part, is trading. So buying and selling currencies, commodities, and crypto, all of those assets, you could trade them on the markets, trading. Now, the second one is partnership, where you partner with Anzo Capital in some form to bring in more business, which will in turn give you what we call rebates. And then we have asset management or copy trading, which most people tend to like to start up with, because then with this one, they can obviously start making profits even without knowing so much. So let's quickly break them down. Trading. Now, in trading, you just like I've mentioned, this is what you would learn over the course of the next 2 weeks. You learn exactly how the market works. You will learn to be able to understand the charts and to read them properly. But you're making profit by trying to look for opportunities yourself, buying and selling, and all of those. Now, you can earn a lot of money, obviously, from here. This is what I do. And then you can make a lot of money and make auxiliary source of income for yourself. Now, jump into the next part. Now, we would be spending a lot of time in this section learning a lot on how do we start trading, where do we begin, how do we, all of those nitty-gritties. There will be several trainings going forward that will address them. Now, then you'll be learning to use the trading platform. This is an example of what the trading platform looks like, and try to make a lot of profit. You can see how much profit is made on this account here. Now, partnership. Partnership is kind of like as the name says, partnership program, where by referring clients to Anzo Capital, if they do business on our platform, that means so you refer clients, if they fund an account and they are trading, well, you can make a lot of money from rebates. Now, how does Anzo Capital make money? Remember, I said we're a non-dealing desk broker. As brokerage firms, our way of making money, just similarly to what you would think about in terms of the Bureau Change or the Aboki guy selling dollar. He makes his profits from spread. So what I mean is this: if you want to go and buy the dollar, and I want to go and sell, if we both get there at the same time and we're talking to him, the value, the price at which he will buy from you, the price at which he will buy from you is different from the price he will sell to me. So let's say you want to buy and he will say, okay, I'm buying at 550. But if I want to sell, he will sell at 555 or 560. That 5 naira or 10 naira difference is what we call spread. So it's not much. However, when he processes a lot of transactions, it will be substantial to care for his business. Now, that is how brokerage firm makes money. They make money from spread. So when you place a trade, it's a tiny spread, very small spread. And as another key point of Anzo Capital, we have one of the tightest spread in the market, if not the tightest spread in the market. That means our spreads are really, really low. It makes your cost of executing trade very, very cheap. Now, on Anzo Capital's platform, when you open a partnership account, or what we call an IB account, and you refer clients to us, when they fund and are trading on their accounts, win, lose, or draw, you would earn rebates for life as long as they continue to trade. So there'll be a training entirely on partnership and rebates, and that'll be explained in I think that should be on either Wednesday or Thursday. So make sure you stay in for that. And then finally, last but not least, asset management or copy trading. Now, copy trading or asset management is a system where you try to leverage the skill set of traders who have already mastered or become proficient in trading. So take, for example, if you've ever heard the statement, stand on the shoulders of giants. They say the dwarf that stands on the shoulders of the giant sees farther than the giant. Now, so you might not have any idea trading, you might not have any experience with trading. However, there are people who have been trading for a long time. They've gone through this process you're going through. Now, as you're starting out, you have little knowledge, you have little experience, you make mistakes, and those mistakes will probably result in some losses. However, there are people who have gone through that. When I started trading, I wasn't good. I made a lot of mistakes. I lost a lot of money because of lack of experience and, because of greed and fear and all of those things. However, now I'm good, right? At least to an extent, to a reasonable extent. And a lot of traders like that. So you can go through that process of learning, but however, while you're learning, you can also just leverage the skill set of traders. Now with copy trading or asset management is where you more or less assign your capital to a trader to trade on your behalf. Now those traders don't work with Anzo capital, obviously, but remember, people want to make money. That's what they want now, right? So when we connect profitable traders to traders who are looking to earn from the market, it's a win-win situation, as long as they're trading on Anzo Capital's platform. So you would have the opportunity to be able to choose from a variety of traders. We have the MA account setup, we have the MQL5 setup, we also have the auto trade setup. All of this provides you the ability to copy trades and all. There'll also be a slide, a training dedicated entirely to copy trading and asset management. I think that should be also on Thursday or Friday. So make sure you also participate in that one as well. So with copy trading or asset management, you're just simply leveraging the skill set of people who are already good. Obviously, because you're leveraging their skill set, you have to compensate them in some way. Usually it's profit sharing. So they take a percentage of the profits that they make for you at the end of the month. And I think that is fair, right? So, but you would be able to choose, make your options, decide if that's what you want or not. And you'll be able to, you're in control. Remember, you're not giving them your money. You're not giving anybody your money. Your money will be in your account. You're just giving them the license to trade on your accounts. They cannot make withdrawals. They cannot do anything. They can only trade the accounts. And when profit is made, the profit is yours. Okay, now this is an example. So as an example, this is a live account actually. And you can see in this account here, so here you can see deposits. Deposits in this account are like $4,000, right? And the withdrawals at the time was about 2,300. However, what is the current balance? 4,200. So you can see that there's profit of, the total profit on this account is about 2,500. And this was like a 3 months period. So you can see how much, about 61% gain, about 61% gain on this account. So imagine if you're copying a trader like this, for example, well, you'll be making profit as it's making profit. Obviously, you can see the graph curve is not straight up, but you can see resultantly the trades, the trader is profitable clearly, as you can see from this profit margin here. So this is one of the powerful things about copy trading. And usually when people ask me, so what route do you think I can take? Well, I usually say if you can afford it, probably start up doing copy trading while you're learning, so that you don't have to put so much pressure on yourself to start making profits. You can be making profits from the trader, and then you can focus on learning and getting better. And once you feel you've gotten better, you can obviously manage your account yourself without having to share profits. Okay, so this is where we come to the end of our training. We spent a full good hour or thereabout on this. And so far, so good. We've discussed a lot. We've learned about the Forex market, the financial markets, who are some of the participants, what are the advantages of trading, how can you participate, what are the 3 layers, trading, copy trading, and partnership, and how you can do that. Now, remember, like I mentioned, this class is the introduction. In the next class, which is tomorrow, we'll now start looking at, how do I get my Anzo Capital account? If you already have, not done that, How can you do what's on your client's portal, and then how can you start trading? And then we'll also look at the MT4, how you can download it and all of those things. So step by step, from now to the next 2 weeks, you should be, if you stay with me, from now to the next 2 weeks, you should become a lot more proficient when it comes to trading and understanding of the global financial market. So I'm leaving you with these final thoughts before I come to answer your questions. If you don't find a way to make money while you sleep, then you would have to work till you die. And it was said by this wise man here, Warren Buffett. Okay, thank you. I hope you were all able to capture the training and learn a lot. I'm going to stop the recording now and take your questions.